What's up, YouTube and Triple T members? Jeremy Barber here, owner of Trading the Trend chat room on Discord. The link is in the description on this video. Come check us out. Free 7-day trial. You don't need to enter any payment information during that trial, so there won't be any automatic charges or anything like that. Completely risk-free 7-day trial. We specialize in end of day or EOD trades. We're buying at the end of market one day and we're selling the next morning. Great for people that have a full-time job, can't monitor the markets all day long. If you can be available at the end of market and the next morning, and if we don't get movement then, we're setting trailing stops during the day and letting the trade do what it wants. It's the only way I've found to be successful working a full-time job. So yeah, come check us out. Link is in the description. So today we're going to be going over my trade rules. Every trader should have rules set up. You should have those rules printed, typed, and posted somewhere where you can actually see them wherever you're trading from. Having rules in your head is great, but it's easily, you can easily finagle your rules to get around whatever you're doing. No. They need to be posted. They are rules. Do not break the rules. I'll have mine at the end of this video. I'll have mine and I have a little note that says, don't be stupid, follow the rules. And you know the rules, but you continuously break the rules. And just having that visual reminder can really help. So my rules, I have 9 rules. 2 of them are the same, 1 and 9. That's pull profits early and often. You want to secure profit, stay consistent, pull profit. That's about the only way you're going to be consistently profitable is if you're pulling profits. And when you say it like that, yeah, it makes sense. But you lose sight of that when you're in a trade. If you can make 3, 4, 5% on a trade, you can grow your account more quickly than you would even believe. Just continue pulling those profits. Rule number 2, do not enter a trade without a plan. More important, without a max loss. Most new traders, when they get into a trade, they're looking at how much money are they going to make on that trade. The first thing I do whenever I decide to enter a trade is, how much am I going to lose on this trade if it goes against me? That's the number one thing I look at. What am I risking on this trade? You should never enter a trade without a set number. If it drops to this, I'm selling and taking the loss. I take losses every day, multiple losses, but I'm still profitable, and that's because I'm taking those losses at a reasonable number. I'm not letting a play get out of hand. Speaking of taking losses, I do not want to take a loss more than 1.3% of my account on any single play. Generally, I try to keep that more around 1%, 0.8 to 1%. The plays that I'm more confident in, I'll give it up to 1.3%. And those are intraday losses. Obviously, you can get stuck in a gap down overnight. Nothing you can do about that. But do not let a trade intraday drop through your max loss. It's a recipe for blowing up your account. Do not enter, number 4, do not enter a trade without a 2-to-1 reward to risk. You don't want to risk 50 cents to try to make 50 cents. You want to risk 50 cents to try to make $1 at minimum. Ideally, we're entering trades that are 3 or 4-to-1, but minimum 2-to-1. Rule number 5, do not chase, buy on the dips. If a stock's put up 3, 4, 5, 6 green 1-minute candles, wait for a pullback. Do not buy. When you jump on something that has quite a few consecutive green candles, it's like jumping on a train. You just run up and jump on a train. Where's that train stopping? You don't know. You jumped on in the middle. Well, that train may be stopping right there. You may be the very top, and it's going to fall from there. Always buy on a bounce. Do not buy when it is moving up. Rule number 6, do not let a winner turn into a loser. Kind of goes back to pulling profits, but nothing kills the morale more than having a good win. Oh, I'm up 5%, I'm up 8%, I'm up 10, 20% on this trade. It's going to keep going. Everything is great. Then you slowly let it sink back down and down. And it's human nature that once a play starts falling, it's harder to sell. You always think, well, it's going to bounce. And then the further it falls, the more convinced you become, well, yeah, now it's fallen 8%. Now it definitely has to bounce. Well, now it's fallen 12%. There's no way it doesn't bounce now. And you just keep talking yourself into holding longer and longer, and you turn a really nice win into a loser. And that it kills the morale. It is not good. That I don't have as big of an issue with anymore, but that's a big one for new traders. They turn good trades into losses. Rule number 7. This is the rule that I happened to break twice last week and had to pay for it both times with pretty large losses. And that's never leave a trade unattended. First of all, if you don't have a day trade or a way to escape a trade, you shouldn't be entering until the end of the day. You can't buy something in the morning and then just hope it holds up all day. Because if it doesn't, if it reverses shortly after you buy and then it's down the rest of the day, you're going to lose a major portion of your position and possibly your account. So you can't leave, if you can't watch the play and you're not watching it, you have to have a stop loss or a trailing stop set. You can't just let it run free. You can come back and who knows what will have happened since then. Rule number 8, last one other than the pull profits that I mentioned earlier. That's the same as rule number 1. Rule number 8 is trade what you see and not what you feel or think. You have to trade the charts. We have preset ideas on stocks and what we think they're going to do, but you can't trade that. You have to follow the candlesticks and follow the charts. If you start guessing or going on how you feel, that's emotions, and that'll get you hurt quickly. Trade the chart. Don't trade how you feel. So that's it for my rules. Next, I'm going to go over my do not trade list. The names on my do not trade list are insignificant, really. I more want to discuss how I created my do not trade list. The tickers on my do not trade list are ones that I either consistently lose on. If I'm losing 7 out of 10 trades on it, there's no reason for me to continue playing that ticker. Another reason you find your way onto my do not trade list is a huge loss. I took a huge loss. Most of those that I took huge losses on were whenever I was fairly new and didn't really have rules set in place and really didn't know how to trade. But I took huge losses on them, and now they have an emotional spot for me. I don't want to try to make that money back because that can lead to bad trading. Say you lost 30% on a ticker and then you go back into it later and you're up 10%. Well, but I lost 30%, so I'm not going to pull my profits at 10%. I want all my money back. Well, then it turns in drops, and now you're looking at a 10% loss on it again. You dug the hole deeper. You didn't get yourself out of the hole, and that's all because it clouded your judgment, clouded your thought. You were going back and revenge trading, trying to get your money back, and you're not going to be very successful doing that. And then also, like I just mentioned, revenge trading. Some of the tickers on my list. I took a not too bad of a loss, kept it nice. But then I went back and tried to trade it a few days later and took another loss and then took another loss on it. And it just, again, it invokes some emotional thing in me. And, it's not worth it. You should have a list of tickers that you need to stay away from. No matter how good the chart looks, no matter what anybody says, just stay away. There are thousands of other tickers each day that you can trade. Why go back to something that can get you out of your game, mess with your head, and cause bad trading? There's no sense in it. So yeah, that's my how I've built my do not trade list, and I'll post those tickers on at the end of this video. But again, the tickers are insignificant. It's more of what they do to me and why they ended up on there. The one other thing that will also be posted is a watch list for next week. These are tickers that I'll be watching on Tuesday, with Monday being a holiday. I'll be watching Tuesday morning to see how they set up, or if them set up at all. They may turn into some day trades. They may end up being some swing trades, or they may just fall apart and not be anything. This list is based off volume and some chart patterns. So, keep them on your list and just see if they set up. And if they set up for a swing, they'll probably end up on my end of day trade list. Thanks for joining. Good luck and stay green.